This is Investment Perspectives with Brad Kimes, daily live streaming interactive, featuring Mrs. Backup. Subscribe, hit the notification, smash the likes. Now, here's Backup Brad Kimes. Come on in.
Welcome back to Investment Perspectives, everybody. Let's take a look at some of the info that's come in since this morning. And I'll tell you, as we look at this stuff, I know a lot of people focus on price action. And all I can tell you is focus on the fundamentals, which are showing growth, partnerships, mergers, acquisitions, things of that nature, continue expansion of companies coming into this space and building out their business models. Let's take a look and jump into this thing. Number one, in Ethereum's world, Cointelegraph says the launch of last Ethereum 2.0 testnet before mainnet announced. Now, this is all in part of Ethereum switching from 1.0 to 2.0, moving their system from a proof of work to a proof of stake. Interesting time ahead for Ethereum. If they get this right, I'm not a financial advisor, but this may be very good for them. Okay, so pulling for those guys because I want to see everybody win. I want to see all boats rise. Now let's take a look at this too on the R3 front. R3 held a webinar this morning. I was not able to try to join that to attend it. If anybody did, please let us know what you found out inside of it. Enterprise considerations for blockchain adoption. We're almost halfway around or halfway through 2020, and the momentum behind blockchain and distributed ledger technology continues. The conversation has shifted from the potential of technology and practicalities in the enterprise deployment. With so much information available, how can you cut through the noise and apply learning from blockchain's early adopters to your own initiatives? Okay, so, this is going to be interesting because we know that R3 is tied into so many things. They're tied into Swift. They're tied in with NASDAQ. I mean, the list goes on and on. A massive amount of the Italian banks. I mean, the list goes on and on. Head on a swivel, R3 is a major player in the market infrastructure of getting a lot of these banks, finance companies, and other businesses brought over into the digital asset system with the Corda platform. And again, just for side note, for the reference, the Corda platform also has access to the Corda settler, which allows the settlement option of XRP for a digital asset for settlement with the use of the Corda settler. Okay, let's keep this moving because we got a lot more to cover here. This is an interesting article here. Decrypto here is, or decrypt.co. European bank uses stablecoin instead of SWIFT for cross-border transfers. Yeah, we want to know more about this. Jeremy Allairs is all in this. Bank Frick, one of Europe's leading blockchain banks, is ditching SWIFT for Circle's USDC stablecoin. The bank says USDC can execute USD payments faster than SWIFT. Circle CEO Jeremy Allairs says USDC's usage in regulated banking is part of a growing trend. A Liechtenstein-based bank is ditching the entrenched interbank settlement service SWIFT in favor of a more contemporary solution, the USDC stablecoin. Whoa. Swift. I mean, I tell you, this is a two-front battle now, right? I mean, really, we're looking at, as a side note here, what Ripple is doing, in fact, dismantling Swift piece by piece, the way Brad Garlinghouse talked about a year or two ago. And now you have Jeremy Allaire coming at it from the stablecoin side of things. Well, there's a two-front war going on for Swift right now. Since its founding in 1998, Bank Frick has revamped into one of Europe's preeminent blockchain banks, offering crypto trading and custody to institutional clients, miners, mining firms. Now the bank has decided to fully capitalize on blockchain and crypto by swapping SWIFT for USDC. Now, this is interesting also, just to note, in case you do not know, Liechtenstein is absolutely an advocate for blockchain technology and cryptocurrency. They are far and away advanced on the legislative side and regulatory side when it comes to blockchain and crypto. With the addition of USDC, we enable our customers to process USD payments quickly and token-based compared to the classic SWIFT procedure. The processing time is significantly reduced, says Staffan Rauti, head of blockchain banking at Bank Frick. The Society of Worldwide Interbank Financial Telecommunication, or SWIFT, has remained in use by major financial institutions since its origins in the 1970s. However, following the emergence of cryptocurrencies, specifically stablecoins, the omnipresent SWIFT has made stern resistance. And, I liken this analogy to the record label industry. The record label industry turned its nose up to digital formatted music, MP3s, Napster. That whole notion back in the 90s into the 2000s, the music industry said, no way we're accepting this stuff. And I'll tell you something, the history told the truth, and history shows that the music industry made a bad decision and they got on the wrong side of history. And to this day, the music industry has been decentralized because they did not embrace the technology. Created under collaboration between Coinbase and fintech firm Circle, USDC, like most stablecoins, is pegged 1-to-1 to the US dollar, providing the stability of fiat currency with the utility of a digital asset. According to Circle co-founder CEO Jeremy Allaire, Bank Frick's addition of USDC is part of a growing trend among financial institutions, a trend we are seeing and expecting to surge in the year ahead. Regulated banks adding support for USDC, which is becoming a significant alternative rail to value transfer for banks, Allaire said in a tweet. And since the start of the year, USDC has added over $230 million to its market cap, bringing it to around $750 million. Though regardless of this impressive year-to-date growth, it's but a drop in the water compared to the leading stablecoin Tether, which has added over $5 billion to its total market cap in 2020 alone. Can adoption in the real world change that? Now, I'll tell you something. That is a real question too, because that reminds me of the Financial Stability Board, which came out not long ago. The Financial Stability Board, a regulatory body connected to the G20. Okay? And they recommended to central banks that they ban private stable coins. Things are getting interesting, and it looks like things are getting a little too crowded, and somebody is either going to have to change the way they do business to fit a new set of regulations that come out, or somebody's business is going to go away. Here we go now looking at this. This is another venture getting ready to make the scene. The app is exclusively for approved and registered clients of Standard Custody and Trust Company, LLC, by PolySign. This app is now available, but now you have to be approved to get it, for approved clients only, and an institutional grade experience from end to end. We will hope to see more. This is the actual website for Standard Custody. I've put out an email to try to get information on it. I've yet to hear anything directly back from them, but we will let you know as soon as we do. Moving on, because I tell you, this is a big deal with PolySign and Standard Custody and Trust. Keep your eye on this. Custody is a very big part of this equation for the digital asset space to open up and begin to really take off, not only on an institutional level, but for a Main Street level, to get Main Street into this game, and people who are not pioneers and speculators like us in this space, but real people who want to put a portion of their portfolios into investment of crypto. They're going to have a custody solution that makes a lot more sense than just cold storage options, right? Okay, so let's keep this going for a second here. And by the way, with that, remember the trend of crypto IRAs, I Trust Capital. I'm telling you guys, these guys offer an amazing product for crypto IRAs, and now recently offering gold IRAs, physically backed, stored in the Royal Canadian Mint for you as well. So make sure you check them out. Descriptions in the box, or links in the description box. Okay, here's a big thing that's happening, and I'll tell you something. If you ever wanted to keep your eye on the market taking shape and things continuing to come together under a bear market, let's say, and the fact that when you look at price, it feels like nothing is happening, well, back partners with Galaxy Digital to offer Bitcoin trading and custody for institutions. Listen to this article now. Back, the Bitcoin derivatives trading company and custody platform owned by Intercontinental Exchange ICE, which also owns the New York Stock Exchange, wink, wink, has partnered with the investment management company Galaxy Digital to launch a joint trading and custody venture for digital assets. The official announcement unveiled earlier today informs that Galaxy Digital Trading, an affiliate of Galaxy Digital, will provide the market access and trading capabilities for the new collaboration. The backed warehouse, on the other hand, will serve as the custodian of the funds. They've just joined forces. The qualified custodian of Bitcoin, regulated by the New York State Department of Financial Services, the backed warehouse, will be safeguarding the digital assets for customers. John Connolly, and head of custody business development at Bakkt, emphasized his firm's qualities to serve as custodian. He outlined that Bakkt is using the same trusted enterprise security framework that protects ICE's dozen exchanges. He added that the partnership with Galaxy Digital will result in becoming one of the largest trading operations in the digital asset space. He added the partnership with Galaxy Digital will result in becoming one of the largest trading operations in the digital asset space. Upon launching its Bitcoin futures platform in 2019, Bakkt expanded its services and has currently onboarded more than 70 firms to the Bakkt warehouse, that statement reads. Okay, so while the company utilizes warm online storage for some customer funds, the majority is stored securely on cold offline wallets. Nevertheless, both options provide zero trust methodology, are covered and by insurance policy, big insurance policy, which increased by an additional $500 million. Now, why do you think they increased that by $500 million? Do you think that's because they see the market being a bear market for much longer? I think you get it. As mentioned above, Galaxy Digital Trading will be responsible for trading and market access as it is uniquely positioned to source liquidity from more than 30 venues and providers. Thus, it will mitigate the risk of market fragmentation and wider spreads impacting counterparty performance. So they're really getting their own price feed and price indexes set up so they can cut down on the arbitrage, right? And all of that spread business. So the announcement notes that the GDT has traded more than $1 billion of volume across Bitcoin and other cryptocurrencies in Q1 2020 alone. And the firm operates 24-hour global trading model. Asset managers and hedge funds considering this service can be assured by high standards we hold as a publicly traded company with audited public financial statements and an institutional-sized balance sheet, said Tim Plakis, head of sales at Galaxy Digital Trading. While speaking regarding the collaboration with Bakkt, Plakis said that they had designed it to service the uptick in demand our two firms have received from traditional asset managers seeking access to physical Bitcoin. They know that they've been getting themselves beat up in the traditional markets. They want access. That is a huge signal right there. As a result, the product coming from Bakkt Galaxy Digital Trading will enable them to offer clients best-in-class efficiency through the entire process of onboarding, trade execution, and storage of their digital assets. These are the kinds of things that get me personally excited about this space, because this is absolutely watching the markets come together. You want to talk about market infrastructure, partners, mergers, collaborations is what this is. You know, this is the stuff that tells you that there is a need for it. And you hear it not only because we're remarking so, but you hear the actual received from traditional asset managers seeking access to physical Bitcoin. Traditional asset managers want physical Bitcoin. They want crypto. And they want crypto to offset the losses they know they're taking and will continue to take in this market. And I tell you what, that's huge. And if you just think for a second, look, I mean, it's not going to be a 40% position they take in something like that with a traditional asset manager, but let's just say 1 to 3%. 1 to 3% allocation in the traditional asset manager's portfolio for crypto. It will change the face of crypto. And that's why it's also so important that we continue to see things like these products continue to arrive as well, because custody definitely needs to continue to mature as a real solution for the institutional big money clients as well as Main Street. All right, guys, that's going to do it for me. If you like the content, hit the like and subscribe. Head on a swivel. You never know. This is crypto.